consists of 5%. The first one as Nurina Izzati binti Abd.Mannan, Nur Faqihah Nabihah binti Juma'in, Shadatulnissa binti Zakaria, Nurul Intan Syazreeana binti Bakar, and Asmawati binti Abdullah.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nabihah binti Juma'in. I will start with my part. The primary goal of this group project was to investigate how chosen banks maximize returns through lending activities while managing liabilities and capital in today's tough financial market backdrop. Our group conducted an analysis based on the institution we choose and determined the bank's background. In this group assignment, we chose Affin Bank Berhad as our major topic. We choose Affin Bank Berhad as the topic of our study assignment because it is a well-known financial institution, a wide range of banking and financial services. Affin Bank Berhad, which is Affin Bank, is a wholly owned subsidiary of Affin Holdings Berhad, which is publicly traded on Bursa Malaysia. Affin Bank was formed in January 2001 from the merging of Perwira Affin Bank Berhad and BSN Commercial Berhad in August 2000. This merger resulted in the formation of Affin ACF Finance Berhad, later renamed Affin Bank Berhad. Following the merger, Affin Bank expanded rapidly, offering a wide range of banking and financial services. The bank continues to invest in technology and digitization to enhance its customers' banking experiences. Customers' growing needs have led to the implementation of programs such as online and mobile banking. Okay, next. In 2005, Affin Bank relaunched to reflect its new vision and commitment to growth and excellence. This branding includes logo updates as well as a more dynamic and modern corporate design. Affin Bank has formed strategic collaboration with both domestic and foreign financial institutions in order to broaden its service offerings. Collaboration with Japan's Daiwa Securities Group Incorporation has enabled the development of investment banking services. Affin Bank seeks to provide high-quality financial services by harnessing cutting-edge technology and innovation. The bank's objective is to be the #1 choice for banking and financial services in Malaysia and around the globe.
Hi, my name is Asmawati and my part is overview of bank products or services. Affin Bank Berhad is a Malaysian bank that provides a range of financial products and services, including personal banking, business banking, and investment banking and Islamic banking. It is one of the leading banking institution of Malaysia, serving both individual and corporate customer. One of the main product or services offered is personal loan, designed to meet the various financial need of individual. This personal loan have two features, which is terms loan, where a fixed loan amount has a fixed repayment schedule over a certain period, and the second one is a flexible loan, which allow the customer to withdraw and repay fund as needed, but within the approval credit limit. The benefit of this feature is to competitive interest rate, which offer competitive interest rate on personal loan, making them affordable for borrower. Second is fast approval. Processing time for loan application ensure customer receive fund promptly. Finally, have an online application that allow customer to make application from their comfort of their homes. Behind the loan benefit offered, it is important to consider the potential drawbacks before applying. Among which, the interest rate offered may be competitive but can still be higher than other financial options. Second, there may be additional fee such as processing fee, late payment charge, or yearly settlement fee that borrower need to be aware of that. That will add to the overall cost of borrowing. Taking on additional debt to this personal loan will impact your credit score if payment are missed or delayed, and affected your credit score. Meeting the bank eligibility criteria such as income requirement and credit history may be challenging for some borrowers. To reduce this potential disadvantage, borrowers should carefully assess their financial situation and compare loan offer from different banks to ensure they fully understand the loan terms and conditions before out a loan. You are also advised to use personal loan responsibility and only borrow what is necessary and reasonable based on your income and financial growth. That's all for me. Thank you.
Okay, next we go for the impact of digital technologies. So financial transformation involves implementing digital technology and tactics to update and improve their financial services. It is critical because It enables banks to enhance efficiency, provide tailored experience, expand accessibility, and remain competitive in a continually changing sector. So the digitization of the bank's products and services may influence customer behavior from a certain perspective. With the development of the online banking system, Affin always helps customers to perform banking transactions anytime and anywhere through mobile apps and online banking, which may increase the convenience for customers to get an engagement with the bank services. Customers also prefer to have self-service options over traditional methods when they are allowed to handle routine transactions themselves compared to walking into the nearest branches. The Affin Always online banking apps will help to enhance the transaction time process, customer service inquiries, and also account management in terms of speed and privacy. And it will lead to better satisfaction and loyalty from the customer when the bank meets customers' expectations. Digitalization also allows the customer to empower them in managing their finance effectively and make financial decisions by having a real-time access to account information, transaction history, and fees. Affin Always as digital technology also used to collect and analyze client data, allowing for more tailored product suggestions and focused marketing activities. This personalization can improve the client experience and foster stronger ties with the bank. Security specialists hired by Affin Banking Group to conduct an independent, periodic security evaluations to discover and rapidly remedy any currently known high-risk vulnerabilities. They also have additional professional security to discover and resolve any unusual activities as soon as possible. So this security planning might build customer trust and confidence towards Affin Bank's digitalization system. Automated savings, investment guidance, and access to financial markets are common features in digital banking services. These tools may inspire people to be more proactive about their savings and investment. The operational costs can be reduced when digitization takes place for a streamlined process compared to manual intervention, especially for tasks such as transaction processing, account opening, and customer service. In terms of banking operations, operational agility can be enhanced when the banks can assist faster with market changes and customer demands. According to the rapid development and deployment processes, they enable updating existing service, introduce new products, and adapt to regulatory requirements. Banks also may use analytics to acquire insights into client demands, enhance product and service targeting, and maximize operational efficiencies due to massive volumes of data on consumer activity, transactions, and preferences. The bank is able to reach customers for any problems and issues via chatbots, online messaging, or an automated system, which also helps in improving customer satisfaction and reducing customer waiting times. Digitization allows payment system progress to occur quickly with multiple payment methods such as mobile payments, contactless transactions, and digital currency, which include cryptocurrency and central bank digital currency throughout the world. This advancement make financial transactions more convenient, secure, and efficient. Regulators are such an important element as it helps in having preservation and stability of the digital financial ecosystem, so a rapid update of regulatory frameworks is needed to manage new risks and problems such as cybersecurity threats, privacy issues, and regulatory compliance in digital transactions. Good global connectivity and economic integration can be developed by conducting international trade financing and facilitating cross-border transactions and economic integration.
Next, I will represent the performance evaluation of Affin Bank Berhad. The first metric is profitability ratio. Profitability ratio is a class of financial metrics that are used to assess a business ability to generate earnings relative to its revenue, operating costs, balance sheet assets, or shareholders' equity over time using data from a specific point in time. There are three metrics to calculate profitability ratio, among them return on assets, return on equity, and interest rate. The formula to calculate return on asset is net profit divided total asset. According to the calculations, Affin Bank Berhad returns on asset in 2022 is 4.37%, which is better than 2023 return on asset of 2.02%. Affin Bank Berhad's strong return on assets in 2022 might be attributed to a substantial non-interest revenue. The return on assets for 2023 is poor to inadequate non-interest income and low interest revenue from funds that are too cautious or locked into fixed rate prior to a rise in market interest rates. The formula to calculate return on equity is net profit divided shareholder equity. Return on equity assesses profitability by demonstrating how much profit a firm makes with the money of shareholders have invested. According to the calculations, Affin Bank Berhad had a greater return on equity of 25.03% in 2022 than in 2023, which was just 30.56%. Profitability ratio assesses the financial performance and efficiency of a bank. As a result, stock investor of Affin Bank gained more in 2022. The formula to calculate interest rate is interest income minus interest expenses divided by total assets. According to the calculation, Affin Bank interest rate in 2022 will be 1.71% up to 1.08% in 2023. A wider spread suggests a greater profit margin for the bank. As a result, it demonstrates that in 2022, Affin Bank will be able to invest in assets that yield more than the cost of its funding sources. The second metric is liquidity ratio. Liquidity ratio is a financial metric used to determine a debtor's ability to pay off current debt obligations without raising external capital. Liquidity ratio measures a company's ability to pay debt obligations and its margin of safety through the calculation of current ratio and loan to total assets. By calculating the current ratio, the formula is current asset divided current liabilities. The current ratio is a liquidity metric that assesses a company's capacity to meet each short-term commitment within a year. According to the calculations, Affin Bank Berhad's current ratio in 2022 is 0.29 times greater than in 2023, which merely 0.25 times. The higher the current ratio, the better company ability to meet its commitments since its short-term asset value is greater than its short-term liability value. The formula used to calculate loan to total asset is total loan divided total asset. According to the calculations, Affin Bank Berhad has a higher loan in total asset ratio in 2022 with 55.06% than in 2023 with 51.72%. The larger the loan, the lower the liquidity, the greater the credit risk for the bank. It signifies that Affin Bank Berhad makes more loan than its deposits, has short maturities and obligations with high rate sensitivity, all of which influence market interest rate fluctuations. The third metric is asset quality ratio. Asset quality ratio refers to the level of credit risk associated with a certain asset. Credit risky assets include loans and advances. As a result, any financial institution that makes more loan and advance must have reliable mechanism in place to govern and monitor credit risk. The formula to calculate provision ratio is credit loss divided by total asset times with 100%. Based on the table, Affin Bank Berhad's asset quality increased dramatically between 2022 and 2023. The growth in total asset and decrease in credit loss provision point to improved credit risk management and financial affluence. The provision ratio for Affin Bank Berhad grew from 2022 to 2023, indicating that the bank's assets are not very solid and are prone to fail.
Okay, so capital adequacy. Capital adequacy represents the capital that a bank has available as a proportion of its risk-weighted credit exposure and has to keep at least 8%. The capital adequacy ratio, formally referred to as the capital to risk-weighted asset ratio (CRAR), is utilized for the protection of depositor while also promoting global financial system stability and efficiency. Capital adequacy have two ratio, which is risk-weighted capital ratio and core capital ratio. Okay, so for the risk-weighted capital ratio, the formula is capital base divided by total risk minus weighted asset. For Affin Bank for 2022, the result is 12.2%, while Affin Bank for 2023, the result is 14.6%. According to this calculation, this demonstrates that Affin Bank performance is strong due to an improved state of capital adequacy, which is beneficial for absorbing possible losses. Affin Bank must maintain its outstanding performance because a greater capital adequacy ratio and hence Affin Bank ability to serve depositor and shareholder. Okay, so for core capital ratio, the formula is Tier minus 1 capital divided by total risk minus weighted asset. For Affin Bank 2022, the result is 14.4%, while Affin Bank for 2023 is 13.9%. According to the calculation, despite some volatility in the value ratio, the bank makes an extensive use of debt in its daily operation. However, Affin Bank should improve their performance so that they are more protective of their depositor and shareholder. So, management soundness. Management soundness is measured by the standard of managerial control over each bank expenditure and operating expenses. Problems related to this involve how institutions manage total expenditure when compared to total revenue and the amount of operational expenses as a percentage of total expenditure. Non-quantitative factors involve administration, adaptability to changing circumstances, adherence to standards, technical expertise, ability to lead, and administration competence. So for management soundness, have one ratio, which is administrative expenses to total expenditure. Okay, for the administrative expenses to total expenditure formula is admin expenses divided by total expenditure. For Affin Bank 2022, the result is 8.31%, while Affin Bank 2023 is 4.9%. Based on the calculation, the administrative expenses to total expenditure ratio decreased from 8.31% to 4.9%. This demonstrates that Affin Bank profitability is strong because of lower administrative costs, which enable the institution to use leverage more effectively. For the conclusion, banks are essential to the development of an economy because they manage the movement of financial resources throughout the community and act as the main sources of economic growth. Growth in the economy is a complex and continuous procedure that is highly dependent on investment, mobilization of resources, and the efficiency of operation for various economic sectors. When a bank performance reflects how its finances are used to achieve its objective, bank and other financial organizations must evaluate how they are performing. The efficiency of the banking sector is crucial because it is regarded as a vital element of the contemporary economy. As a result, banking and other financial institutions must be extensively examined and analyzed to establish a solid financial framework and a functioning economy. So that's all from us. Thank you.